Greetings, welcome back. So today we'll be doing accounting paper 2, final examination 2025. So now we can start. So question 1, we have reconciliations. So we are going to start with our bank reconciliation statement. So the mark allocation is 40 marks and our duration is 30 minutes. So we are given the information that relates to Duma stores on 31st July 2025. The business is owned by Duma Matupa. They use the official bank statement received on the 28th. So the business receives the bank statement each and every month on the 28th. So we are required to reconcile the BRS and the cash journals. So 1.1.1, we are required to complete the table provided in the answer book by showing the entries that must be recorded in the cash journals. So we are given our CRJ and CPJ in our answer book. We are also required to prepare a bank reconciliation statement on 31st July 2025. So now let's go to our information. We have information A, which is the extract from the bank reconciliation statement on 30 June 2025. So we had two outstanding deposits, the one dated 29 June 2025. We also have the one dated 30 June 2025. So if you can check here, we had an outstanding deposit for 132,000. So it was outstanding on 30 June 2025. So on our bank statement on July, it appeared. So I see the 132. So if it has appeared, it means it is no entry. So we are not recording it because it's already recorded. Then the internal auditor discovered that the supporting cash slips for the deposit on 30 June 2025 amounted to 18,600. The shortfall is irrecoverable because the cashier at that time has resigned. Okay, so now let's check the deposit on 30 June 2025. So 30 June on our bank statement, it appeared as 8,600. So let's go check our previous bank reconciliation statement. On our previous bank reconciliation statement, it appeared as 18,600. So the amount that was supposed to be deposited, it was 18,600. But on actual, the account that appeared on our bank statement, it's 8,600. So we're firstly going to check the difference. So 18,600 minus 8,600. We get a difference of 10,000. So since this was recorded on our CRJ as money coming in, it means we have to cancel it as a payment. So it's going to be recorded under cash payment journal. So let's go to our answer sheet. So this is our cash payments journal. So here under cash payments journal, we're going to have 10,000. Then let's move to another information that is going to be useful to us. So EFT 124 on 3 July 2025 to Typex stationers is correct on the bank statement. So let's go and check EFT 124 on our bank statement. So this is our EFT 124 to Typex stationers. It's 3,150. They are saying it's correct on the bank statement. So when we check our previous bank reconciliation, we still have the EFT 124, which is recorded as 5,310. So if you can check, it means that on our journal, we have recorded more. We have recorded 5,310 instead of recording 3,150. So since this is an EFT payment, it means we recorded more on our CPJ. Therefore, this entry is supposed to be cancelled on our cash receipts journal. So we're firstly going to find the difference, 5,310, then minus the correct figure of 3,150. Then we get a difference of 2,160. So this entry is going to be recorded under cash receipts journal. The direct deposit on 10 July 2025 by Q Ngobo, a tenant, was recorded incorrectly in the cash payments journal. So we received money, but we recorded as if we are paying. So now we need to correct the error. So the first thing that I'm going to do here, I'm going to draw our T account. So here we have our bank account. Our bank account is an asset. It's going to increase on the debit side and decrease on the credit side. So the debit side will represent our CRJ, while the credit side will represent our CPJ. So we received money for rent from our tenant, but instead we recorded as if we have made a payment. So now this is the question. Let's go and check the deposit on 10 July 2025. So 10 July 2025, we have a deposit of 16,500. So we recorded this thing as a payment. So it was supposed to be recorded on the debit side, but the business did not record it on the debit side. They instead recorded it on the credit side. So this is the question. Was this entry supposed to be recorded on the debit side? No. Why? Because it's a receipt, but we treated it as a payment. So now what are we supposed to do? We firstly need to reverse the entry. So it means the 16,500, we are now reversing it. Then we record our correct entry, which is also 16,500. So 16,500 multiplied by 2, we get a total of 33,000. It means it has to be recorded on our CRJ. So here on CRJ, we have 33,000. The debit order on 15 July 2025 to Prime Insurance for the business insurance was processed twice due to insufficient funds in June. So the debit order on 15 July 2025 to Prime Insurance for the business insurance was processed twice due to insufficient funds in June. The amounts covered payments for both June and July 2025 to bring the account up to date. Okay, now let's go and check our information. So this is the debit order of 2,700. So since the one applies for this month, it means it's going to be recorded on our CPJ. So CPJ, we're going to have the 2,700. And also this other 2,700 should be recorded on our PRS because it does not relate for this month, but it was for the previous month. Okay. So a bank transfer on 28 July 2025 in favor of AZ suppliers was overstated by 11,000 by the bank clerk. The bank was notified and will correct the error in August. So if the bank will correct the error, it means this entry will be corrected under BRS, which is our bank reconciliation statement. Now let's go and check for entries that are still not recorded on our bank statement. So here we have EFT 125 to Cola Stores for 9,990. It was outstanding on 30 June. It appeared on July, so it means it's no entry. We have dealt with this one. So we have interest of 975. Since this interest is on the debit side of our statement, it means that it's going to affect our CPJ, which is our payment. So here we're going to have 975. We also have service fees. Service fees, it will form part of our bank charges. So here we have 605. Then now entries in the cash journals for July 2025 that were not reflected on the bank statement. So if the entries appeared on the cash journals, but they did not appear on the bank statement, it means they will be recorded on our BRS, which is our bank reconciliation statement. Okay, so now let's go to our bank reconciliation statement. We are firstly going to start with our balance as per bank statement. Then we always credit our outstanding deposit. Then we always debit our outstanding EFTs. So if you can check, we have an outstanding deposit of 41,850. So we're going to credit 41,850. Then we have two outstanding EFTs. It's EFT 207 and EFT 208. So we have EFT 207 and EFT 208. So here 207, we also have 208. So we have 7,650 and 10,800. So here 7,650, then here 10,800. Then Duma, the owner, used the business debit card on 29 July 2025 for the payment of 13,000 to Star Motors for repairs to the company vehicle, but he neglected to submit the transaction slip to the bookkeeper. Okay, so it means this transaction slip, since it was not submitted to the bookkeeper, it means that this entry was not recorded. So we're going to record it on our cash payments journal because it's a payment. We have 13,000. Then now let's start with the debit order for insurance. Here we can say let me go back and check. We can say insurance debit order, or we can say credit amount wrongly debited, because the other amount it's for the previous month. So now let's go back to our information and check how much is the amount that you are talking about. So it's the 2,700. So this 2,700 will be on the credit side. Now we have this amount for repairs that the owner didn't submit the slip to the bookkeeper. So since it was not recorded at all, it means it should appear both on our CPJ and our bank reconciliation statement. So here we can say it's payment for repairs. It's payment for repairs. So how much is our payment for repairs? It's 13,000. The bank statement on 28 July 2025 showed a favorable balance of 119,080. So if it's the favorable balance, it means it's positive. It's going to be on the credit side. So here on the credit side, we have 119,080. So let's go back to the transaction. This one. A bank transfer on 28 July 2025 in favor of AZ suppliers was overstated by 11,000 by the bank clerk. So now let's check this payment. This is the one for 12,000. It was overstated by 11,000. So it means this 11,000 should be decreased on the credit side. We can say correction of error. Then we record our 11,000. Then the balancing figure, it will be our balance as per bank account. So now we're going to check which side is the bigger side. So in this case, the bigger side is the credit side. So we're going to say 119,080 plus 41,850 plus 2,700 plus 11,000. Then we get a total of 174,630. So we're going to balance both sides using the same figure. 174,630 minus 13,000 minus 10,800 minus 7,650. Then we get our balances per bank account of 143,180. So now we are done with our BRS. So let's move to our information. Identify two problems with figures with the management of cash in Duma stores. In each case, provide a different solution for how these problems can be prevented. So let's go to our information. So the first problem that I see, it's outstanding deposits. They are doing late deposits because look at this 132,000 plus the 18,600. So here, the first problem we can say it's late deposit. Then they said we should code figures. We have 132,000 plus 18,600. So these are our late deposits. 132,000 plus 18,600. So now what could be the solution? For this late deposits, we can say daily deposits should be done. So daily deposits should be done. So daily deposits should be made. Then the second problem that you can see here, it's missing of cash. Because if you can check the information, this deposit of 18,600, it appears as 8,600. So we have missing cash of 10,000. So missing cash is 10,000. Then now, what could be the solution to this problem? We can say division of duties. We can also say encourage EFT payments from customers. So we can encourage EFT payments from customers. The business can also make use of make use of cash in transit services such as Fidelity and G4S. So let's move to our creditors reconciliation statement. So we are given the information for PG Stores. So PG Stores is owned by Portia Gina, and she buys goods on credit from Matsulu suppliers. The statement of account received from Matsulu suppliers reflected a balance of 287,600. So Matsulu suppliers says we owe them 287,700. So use the table in the answer book to indicate how the relevant balances will change when preparing the creditors reconciliation. Indicate the amount as well as a plus sign for increase and the minus sign for decrease. Okay. So this is our information. This is our creditors ledger. In our creditors ledger, we said we owe them 270,140. But in their statement, they said no, we don't owe them 270,140. We owe them 287,600. So these figures are already provided for us in our answer book. So let's start with our transaction. So when comparing the creditors ledger to the statement of account received from Matsulu suppliers, the following differences were noted. So we have debit note 785 was incorrectly recorded in the creditors ledger. The statement shows the correct amount of 17,280. So we're going to ask ourselves a question. Where is the problem? So the problem here is in the creditors ledger. So where are we supposed to fix the problem? It means we should fix it in the creditors ledger. So let's go and check debit note 785. Debit note 785, it's recorded as 13,680 and the correct amount is 17,280. So we recorded more. It means we have decreased more. So we're going to check the difference. 17,280 minus 13,680. Then we get our answer, which is 3,600. So we're going to decrease our creditors ledger by 3,600. Invoice 471 was incorrectly recorded on the statement from Matsulu suppliers as 40,500. So now, where is the problem? It means the problem is on the statement. So where should we fix the problem? It means the problem should be fixed on the statement. So let's go and check invoice 471. So invoice 471, it's 100,500. But on our suppliers books, they recorded it as 40,500. It means it's an undercast. So we need to add. So we're firstly going to check the difference. 100,500 minus 40,500. Then we get a balance of 60,000. So we need to increase our statement by 60,000. The transactions on 24 June 2025 in the creditors ledger is for merchandise returned to Matsulu suppliers. Okay, let's check the transaction on the 24 It's debit note 11,000. It's debit note 1,106. So since it's a debit note, it means that it was supposed to be recorded on the debit side, but it was not recorded on the debit side. Instead, they recorded it on the credit side. So now what should we do? We are going to do a rough draft. This is our creditor's ledger. It's a liability. It's going to increase on the credit side and decrease on the debit side. So a debit note was supposed to be recorded on the debit side, but this entry was not recorded on the debit side. It was incorrectly recorded on the credit side. So they recorded this 16,200 on the credit side. Now, this is the question. Was this 16,200 supposed to be recorded on the credit side? No. So what should we do? We should firstly reverse the entry. Then after reversing the entry, we record the correct entry. Okay. So now we have 16,200 multiplied by 2. We get a balance of 32,400. It means we have to decrease the 32,400 in our creditor's ledger. So creditor's ledger, we're going to say minus 32,400. Then the statement showed interest charged at 1,080. The correct amount of interest is 1,410. Okay. No entry was made in the creditor's ledger. So it means we have to increase the creditor's ledger by 1,410 because the 1,410 is for the interest. Then now in our statement, they recorded the interest of 1,080 instead of recording 1,410. So it means they've recorded less. We firstly need to check the difference. So 1,410 minus 1,080. We get a difference of 330. So we're going to increase our statement by 330. The statement reflects transactions up to 25 June 2025. Okay. So it means other transactions that are beyond 25 June, they are not recorded. So we have invoice 681 for 42,000. So it means we have to increase our statement by 42,000. So here I've made a mistake. It should go on top. So here it's plus 330. Then here it's going to be plus 42,000. All other transactions recorded in the creditor's ledger appeared correctly in the statement of account received from Matsulu suppliers. Okay. So now we have the EFT and discount of 154,380. It means they should decrease our statement. So we have to decrease our statement by 154,380. So now we are done. We can balance our creditors recon. So we're going to say 270,140 minus 3,600, then minus 32,400. Then we add the 1,410. It gives us a total of 235,550. Then we do the same on the statement of account. We say 287,600 plus 60,000 plus 330 plus 42,000. Then we minus the 154,380. Then we get the same figure of 235,550. So it means we have reconciled because now everything is agreed. So explain how the business can prevent this problem from happening. Okay, let's go to the statement before we answer the question. So the purchasing manager of PG Stores ordered 6 chairs for the offices. His friend Mike, the sales manager of Confire Suppliers, invoiced PG Stores at 30,000 per chair. On the purchasing manager's request, the internal auditor has discovered that the chairs are trading at an actual price of 7,500 each. So explain how the business can prevent this problem from happening in the future, excluding separation of duties. So provide 2 points. Okay. So the first thing, the business can compare orders with the invoice. Okay. So we can say compare orders with the invoice. Then the business can also conduct internal audits. Now we can also say they can request for statements from suppliers. So request statements from suppliers. So what action should be taken against the purchasing manager besides dismissing him? Provide 1 point. So the business can open a criminal investigation with South African Police Services. So a criminal investigation means it should be investigated with subs. Another thing that can happen, it can be a disciplinary hearing. Also, the purchasing manager can be told to reimburse the money, so to bring the money back. So we can say reimbursing the money. So now we are done with our question 1. Let's move to question 2. So question 2, we have our stock valuation. So we are given the information from Super Savers Supermarket. So the following information was taken from the accounting records of Super Save Supermarket in respect of flavored juices. So they sell 2-liter bottles. The first in, first out, which is the FIFO stock valuation method, is applicable. So the business is managed by Brian Mills. The financial year ended on 28 February 2025. So we are required to calculate the value of the closing stock using the FIFO method. Okay. Now let's go to our information. So if you can check, this is our closing balance of 980 units. So now, where are we going to get the amount from this 980 units? It means we should start from the recent purchases, because we assume that the stock that it's bought first was the stock that was sold first. So if you can check here, we have returns. This returns, it's 32 units for 1,344. So in order for us to check where did you get this returns, we are going to say 1,344, then divided by the number of units, which is 32 units. Then we get a unit price of 42, okay? It means these returns are from February. So we had 850 minus the 32 units that are being returned, okay? So we are left with 818 units. So from this 980 units, it means we're going to take 818 units using the 42 rands. So here we're going to have 818. So we're going to have 818 multiplied by 42 rands. Then we get a total of 34,356. Okay. So from our closing stock of 980 units, we have already valued the 818. So how many units are remaining? It's going to be 162 units. So where are we going to get the 162 units? We're going to take this 150 for 37. Okay. So we're going to say 150 units multiplied by the unit price of 37. And then we get the total of 5,550. So now from this 162, we have already calculated the 150. So how many units are remaining here? It's going to be 12 units. So the 12 units will be taken from this December purchases. So we're going to say we have 12 units remaining multiplied by the unit price of 37. And then it gives us a total of 144. So we're going to add them together. 34,356 plus 5,550 plus 444. we get a total of 40,350. So Brian has noticed that some of the stock of flavored juices has exceeded their shelf life, which is the sell-by date of 65 days. Identify the value of the stock that Brian is referring to using the FIFO stock valuation method. Okay, now let's go to our information. Our accounting period ended 28 Feb 2025, but we still had our stock for December. So 31 days of December plus another 31 days of January, it's now 62. Then February, it means they have exceeded the 65 days. So we're going to use the stock in December. So we're going to say 2,600 multiplied by the unit price of 37. And then we get the total of 96,200. So how can Brian manage the stock of flavored juices to avoid losses incurred by the business? Provide 2 points. So the first thing that Brian can do, Brian can order stock according to customer demands. So we can say order stock according to customer demands. According to customer demands, that will be our first thing. Then the second thing, he can sell in bulk to offer discounts. So sell in bulk to offer discounts. Brian can also make sales promotion, for example, reducing the prices like markdowns. So we can say make sales promotions. Those sales promotions, you can also say markdown because we are reducing the price, so they can mark down the items. So of items that are selling slow. Okay, so now we can move to the next question. So 2.2, we are given the information for Pandora traders. So 2.2.1, calculate the value of the closing stock on 30 June 2025 using the specific identification method. So we are focusing on Rotring model. So let's go to our Rotring model. So Rotring model, we had an opening stock of 30 units and then we bought 90 units. So from this 90 units, let's see. Then we also have the ones that we have sold, which is 79. Okay. So here we are going to say the opening stock of 30 units plus our purchases of 90 units minus the one that you have sold, which is 79 units. So now we are left with 41 units. So let's go back and check how much do we buy these products for. So we buy them for 15,500. So we're going to say multiplied by the unit price of 15,500. So 41 multiplied by 15,500, we get the value of 635,500. So 2.2, we are required to calculate the stock holding period in days using the closing stock for punches model. Okay. So now let's go and check our punches model. So punches model, we have a closing stock of 780,500. So we're going to say 780,500 because they said we should use the closing stock. Then here we are not given the cost of sales. It means we can calculate the cost of sales for ourselves. So we have the opening stock of 557,500. So here we have 557,500. Then plus the purchases. So our purchases for Rotring, for punches, sorry, it's 2,453,000. So plus 2,453,000. Then let's check, do we have any returns? We don't have the returns, but we have the ones that we have sold, which is, okay, let's minus our closing stock, which is 780,500. So we're going to minus the 780,500, then multiply it by 365 days. So here we still get the 780,500. Then we say 557,500 plus 2,453,000 minus 780,500. We get a balance of 2,230,000, then multiplied by 365 days. So we get a stock holding period of 127.75 days. So comment on the stock holding period, provide 1 point with figures. So the stock holding period for the year ended 30 June was 69 days, okay? So we can see that the stock holding period increased from 69 days to 127.75 days. So here we are going to say the stock holding period increased from 69 days to 127.75 days. So 2.2.3, we are given the information for the clear view model. So although the clear view model had units written, Moses is very pleased with his decision to introduce it as a new model. Provide 2 points with figures to explain why Moses is pleased. Okay. So now let's go to our information. If you can see at the beginning of the year, we didn't have the clear view. So they only bought 90 units. From this 90 units, 15 were returned. So 90 minus 15, we are supposed to have 75. So from this 75 units, 65 units were sold. Okay. So now we can say here, out of the 90 units bought, only 15 were returned. So out of the 90 units bought, only 15 units were returned. We can also say out of the 75 units, 65 units were sold. So out of the 75 units, 65 units were sold. And how much did you get from selling those 65? We got 3,185,000. So we can say for 3,185,000. So Moses wants to reduce the number of units being returned to the suppliers. Give one suggestion on how this can be achieved. So the first thing that Moses can do, they can conduct supplier audits. So they should check the stock that is coming from supplier to see whether it meets the quality that is desired by the business. So conduct supplier audits. Then the second thing that the business they can do, they can clearly define their quality standards. So clearly define quality standards. Then the last one that you can do, we can say the business should vet or choose their suppliers carefully. So here we'll say vet suppliers carefully. So now we are done. We can move to the next question. So here it's management of inventories. So we are given the information regarding electric fans. So identify the decision that Robin implemented about the electric fans. So now let's go and check the information that affect the electric fans. So if you can see here, the selling price was increased from 200 to 270. So we can say he increased the selling price from 200 to 270. That's the first thing that you can see. Also, the markup, also you increase the markup from 60% to 80%. That is another thing that you can put. So explain how this decision has had a positive results for this business. Provide 1 point with figures, okay? So if you can see, the total sales increased from 112,000 to 137,700. So here we'll say total sales increased from 112,000 to 137,700. Another thing here that you can quote the gross profit. So gross profit increased from 42,000 to 61,200. So gross profit increased from 42,000 to 61,200. Then 2.3.2, so we have the information regarding fridges. So Robin changed the brand of fridges that he was selling. Provide 1 point with figures to show that this was not a good idea. So let's go to fridges. If you can check, the total sales decreased from 5,161,500 to 2,418,750. So that will be our first point. So total sales decreased. So it decreased from 5,161,500 to 2,418,750. Now we can also quote the gross profit. So the gross profit decreased from 1,720,500 to 806,250. So gross profit decreased. It decreased from 1,720,500 to 806,250. Then another thing that you can quote here is the number of units sold. So number of units sold decreased from 740 units to 430. So here, number of units sold decreased. It decreased from 740 units to 430 units. So now we are done with our question 2. We can move to our question 3. So question 3, we have cost accounting. We are given the information from locksmith manufacturers. So the business manufacturers manufactures security jackets. So we are required to complete the factory overhead cost note. You are also required to calculate the cost of production of finished goods for the year. So let's go to our information and see what do we have. So our first expense under factory, we have our water and electricity. So let's go to our answer sheet. So here we have water and electricity. So the transaction says 75% of the water and electricity must be allocated to the factory. The remainder must be shared equally between the other departments. So when we do the factory overheads, we are only looking for expenses that are directly involved in the factory. So it means we have to calculate the 75%. So we're going to say 915,000. Then we want the 75%, which is allocated to the factory. So 915,000 times 75 divided by 100, we get a total of 686,250. Then our second expense, I see insurance. So here we have our insurance. The information says insurance include an additional premium of 10,800 paid for the period of 1 December 2024 to 30 November 2025. This expense is allocated between the factory, the sales department in the ratio 3:1. It means the factory takes 3 while the sales department takes 2. So the first thing that you are going to do here is to draw our timeline. So our accounting period ended 28 Feb 2025. If it ended 28 Feb 2025, it means that it started 1st March 2024. Then our second step will be to interpret our information. So this amount was paid for the period 1 December. So we have March, April, May, June, July, August, September, October, November, December. So they paid it here 1 December 2024. So December, January, February. It's 3 months that it's within our accounting period. So if you can check 1st December till 30 November, it's a period of 12 months. So from this 12 months, we have the 3 months that it's within our accounting period. So it means that the 9 months will be in advance. So how are we going to get insurance for 1 month? We're going to say 10,800 divided by 12. Okay? So now when we say 10,800 divided by 12, that way, the amount that you are going to get is going to be our insurance for 1 month. Okay? So now let's calculate 10,800 divided by 12. We get an amount of 900. So what do we want? We want the 9 months that it's paid in advance. So 900 multiplied by 9. Then we get the total of 8,100. Okay? So now here insurance, we start with the amount that it's already recorded of 78,000. So from this 78,000, we record the one that you have paid in advance, which is the 8,100. Then we get our insurance of 69,900. So what do we want? We want the 3, which is the allocation for the factory, divided by what do we have, which is a total of 5. So 69,900 multiplied by 3 divided by 5, we get a total of 41,940. Then also here we have our rent expense. So here we're going to record the rent expense. So locksmith manufacturers rent their premises from dynamic properties at a fixed rate per meter squared. So we pay the rent according to the floor meters that you are renting. So due to expansion, locksmith manufacturers had to rent an additional space for the factory only from 1 October 2024 at the same fixed rate per square meter. So the following floor space was applicable for the year ended 28 February 2025. So if you can check, the factory used to use 200 meter squares, okay? But now the factory is using the 225 meter squared. So now we need to calculate our rent. So what are we going to say? What do we want? We now want the 225 square meters, okay? So here we are firstly going to start with our amount for rent. So let's go and check how much is our rent. So our rent expense is 240,400. So we're going to say 240,400. What do we want? We want the 225 divided by what do we have, which is the 200 square meters. Then we get our answer, which is 270,415. Then now advertising, its selling and distribution cost. We have other factory expenses. It's given on our answer sheet. Okay. So let's go to our information. So here provide for depreciation on factory equipment. So we're also going to have depreciation. So which method are we using? We are using the diminution balance method. So we have additional information. Note, new factory equipment costing 684,000 was installed on 1 November 2024. This was properly recorded. So if it was properly recorded, it means it's included in our balance. So we now have our factory equipment at the end of the year. So how do we get our factory equipment at the beginning of the year? So we're going to say our amount at the end, which is 5,400,000 minus the new equipment that you have bought for 684,000. So here we are going to say 5,400,000 minus 684,000. Then we get our old of 4,716,000. So this 4,716,000 is our opening balance at the beginning of the year. So which method are we using? We are using the diminution balance method. So we're going to take our cost price and minus our accumulated depreciation. So we have already calculated our cost price of 4,716,000. Now we need to minus our accumulated depreciation. So now here we are given the accumulated depreciation of 1,680,000. So we are going to say our cost price minus our accumulated depreciation of 1,680,000. Then we get our carrying value. So here our carrying value is going to be 3,036,000. So 4,716,000 minus 1,680,000. We get the carrying value of 3,036,000. So 3,036,000 multiplied by the rate of depreciation, which is 20 divided by 100. The old, it's always 12 over 12. Then here we get our depreciation, which is going to be 607,200. So here we get 607,200. So here under depreciation, we have 607,200. We can also calculate depreciation of the new. So we bought the new equipment for 684,000. Since it's new, it means it does not have any accumulated depreciation. So we're going to say our cost multiplied by our rate of depreciation, which is 20 divided by 100. So now to get the number of months, I'm going to draw a timeline. Our accounting period ended 28 February 2025. It means that it started 1st March 2024. So now we can interpret our information using the timeline. So we bought it when? 1 November. So we have March, April, May, June, July, August, September, October, November. So here we have 1st November 2024. So if you bought it on the 1st of November, when did you start using it? November. So you used it November, December, January, February. So you used it for 4 months. We're going to say multiplied by 4 divided by 12. So now 684,000, which is our cost price, multiplied by the rate of depreciation, which is 20 divided by 100, then multiplied by the number of months, which is 4 divided by 12. Then we get our total depreciation of 45,600. So here we are going to add the 45,600. So to get our total depreciation, we are going to say 45,600 plus 607,200. Then we get the total depreciation of 652,800. So now to get the total, here we are going to say 686,250 plus 41,940 plus 270,450 plus 652,800. Then you also add the 737,010. Then we get a total of 2,388,450. So now we are required to calculate the cost of production of finished goods, okay? So let's go and check the information that you have. So we know that if we take our direct material cost plus our direct labor cost, it gives us prime cost. So here we are going to take our prime cost of 6,025,000. Then we add our factory overhead. So already we have calculated the factory overhead of 2,388,450. Okay. Then we have to add our work in progress at the beginning of the year. So our work in progress at the beginning of the year is 125,000. So we're going to add the 125,000 and then we minus the work in progress at the end of the year. So if you can check our work in progress stock at the end of the year, it's 93,000. So we minus the 93,000. So our total cost of production of finished goods, we are going to say 6,025,000 plus 2,388,450 plus 125,000. Then we minus the 93,000. Then we get the total of 8,445,450. So now we are done. We are required to calculate the break-even point. So what is the formula of calculating the break-even point? It's going to be our fixed cost divided by our selling price per unit minus variable cost per unit. So let's go and check the information that is going to be useful to us. Okay. So here we have our total fixed cost per unit, which is 80. So we also have the number of units produced and sold. So we are going to say our fixed cost per unit of 80 multiplied by the number of units produced and sold, which is 28,750 units. So 80 multiplied by 27,000 multiplied by 28,750. Then we get a total of 2,300,000. So it means that our fixed cost will be 2,300,000. So we're going to say 2,300,000, which is our fixed cost, divided by our selling price per unit. So our selling price per unit here, we have 265. So 265 minus our variable cost per unit. So our variable cost per unit is 146. So here we still get 2,300,000. But now if you can say 265 minus 146, we get 119. So to calculate our break-even point, we are going to say 2,300,000 divided by 119. Then we get our break-even point of 19,238 units. So comment on whether Dawn should be satisfied with the number of units produced and sold. Provide 1 point with figures, okay? Let's see the number of units produced and sold. The number of units produced and sold, it's 28,750. While our break-even point is 19,328. It means, yes, they should be happy. So we can say the break-even point, or we can say the number of units produced and sold is more than the break-even point. So the number of units produced and sold of 28,750 is higher than the break-even point. Than the break-even point of 19,238 units. So we can also check the difference. We can say 28,750 minus 19,238. And then we say the business is making an additional profit. Okay, so now we are done. So identify the fixed cost item with figures that has been poorly controlled and give a possible reason for this concern. So let's go to our fixed cost. So here, if you can check, we have our administration cost. It increased from 42 to 46. Okay. So here we can say administration cost increased if we can check our administration cost, it increased from 42 to 46 per unit. So we're going to say it increased from 42 to 46 per unit. So reason for concern, I already wrote it already. We can say increased from 42 to 46. We can also use figures. We can say it increased from 1,050,000 from 1,050,000 to 1,322,500. So how did I get this? I said the administration cost of 42 multiplied by the number of units produced and sold, which gave us a balance of 1,050,000. Then here also I said our administration cost per unit of 46 multiplied by the number of units produced and sold. Then it gave us a total of 1,322,500. So now we move to cell phone screen covers. So variable cost item with figures that has been poorly controlled. Give advice on how to improve control over this cost item. Okay. So now let's go to our information for cell phones. They are talking about variable cost. So the first thing that I see, our direct material cost increased. Okay, wait. So our direct labor cost. Wait, let me go back to the question. Variable cost item that has been poorly controlled. Okay. So poorly controlled, I see the direct material cost. It increased from 24 to 38. Okay. So here we're going to say direct material cost. Direct material cost increased. Then we check, it increased from 24 to 38. Then the advice that you can say regarding the direct material cost, the business can try to find a cheaper supplier or a local supplier. So we can say find a cheaper supplier. And then another advice that you can give is that the business can buy in bulk in order for them to get a discount. So buy in bulk to get discounts. In bulk to get discounts. So now we have to quote a variable cost item with figures that has been well controlled. Okay. So here, if we can check, let's check our direct labor cost. Our direct labor cost, it decreased from 22 to 20. So here we are going to say direct labor cost. So our direct labor cost decreased from 22 to 20. So the reason, we can say employees are well trained. It means the business got rid of employees that were not skilled, and they got skilled employees. So you can say employees are well trained. And another option that you can say, we can say employees are working to achieve the target set by the business. So employees are working to achieve the target set by the business. So now we are done. We can move to our last question, which is question 4. So question 4, we have budgeting and problem solving. So information related to Vivian Traders. So it's the accounting period end on 31st January 2026. So complete the data's collection schedule for January 2026. We are also required to calculate this amount. Then now let's go to our information. Then also let's go to our answer sheet and see what do we have. So this is the data's collection schedule that it's given to us. Okay. So let's go and check the information that you are using to prepare our data's collection schedule. So credit sales accounts to 75% of total sales. Okay. We won't calculate the credit sales because they are already given to us. The credit sales that you are supposed to calculate is the one for January. Okay. So let's take our total sales for January, which is 2,030,000. From this 2,030,000, what do you want? You want the credit sales, which is 75% divided by 100. Then we get our credit sales of 1,522,500. So here we are going to have 1,522,500. So here debtors pay according to the following trend. So 30% in the month of sales subject to a 4% discount. So we have October, it means they paid for 30% in October, and then 50% in November, and then 14% in December. So this 198,450 is the 14%. If you can say 1,417,500 multiplied by 14%, we get a total of 198,450. So in January, we are not collecting anything. Now, when we move to November, it means 30% in November, 50% in December. If you can calculate, this is the 15%. So after December, we have the 14% in January. So if now we can say 1,443,750 multiplied by 14%, we get an amount of 202,125. Then also here in December, 30% will be collected in December. This is the 30% plus the 4% discount. Then 50% will be collected in January. Okay. So now we are going to say 1,496,250 times 50 divided by 100. And then we get a balance of 748,125. So here in January, we won't collect anything in December, but you are going to collect something in January. So in January, we have 1,522,500. So since it's the transaction month, it means we are supposed to collect the 30%. So what we are going to do, we are going to firstly calculate the 30% separately. So we are going to say 1,522,500 times 30%. So if you calculate the 30%, we get the balance of 456,750. From this 456,750, we are going to give our debtors a discount of 4%. So this is the 100%, we minus the 4%, we get the 96%. So what do you want? You want the 96% divided by 100. So here we are going to say times 96 divided by 100. Then we get our answer, which is 438,480. So here it's 438,480. So to get the balance, we are going to say 202,125 plus 748,125 plus 438,480. Then we get a balance of 1,000,000 388,730. So now let's go to our question paper. So this is the first information that you are calculating. So now we are required to calculate bad debts for January. So let's go to our answer sheet. So if you can check October, we had credit sales of 1,417,500. So let's go to our debtors collection period. It means 30% was collected in October, and then the 50% in November, and the 14% in January. Then how much are we writing off? So we're going to combine them. 30 plus 50 plus 14, we get 94%. So from this 100%, we minus the 94%. It means the amount that you are writing off is going to be the 6%. So here we are going to say we have 1,417,500. From this 1,417,500, what do we want? We want the 6%. So we're going to say multiplied by 6 divided by 100. Then we get our answer, which is 85,050. So now we are required to calculate the salary of the sales manager. Okay, so let's go to the relevant information. So the sales manager is paid for 20 days per month at a fixed daily rate. She will apply for 4 days unpaid leave in January to attend personal matters. Okay, so let's go and check the salary of our sales manager. So if we check, the sales manager earns the salary of 29,000. So we're going to say 29,000 divided by 20 days, because we know that the salary is for 20 days. So now if we can say 29,000 divided by 20 days, then how much do we get? We get an amount of 1,450. So from this 1,450, we multiply it by 4 because we want the 4 days. So we're going to say multiply it by 4. Then we get an amount of 5,800. Okay, so it means we have to decrease it by 5,800 for unpaid leave. So here we're going to say the salary that you already have, which is 29,000, minus the 5,800. Then we get the balance of 23,200. So now we need to calculate the salaries for assistants for December 2025. Okay, so the assistants, they earned 88,000. So the information says all assistants will receive a 60% bonus in December 2026. Okay, all assistants will receive their annual salary increase of 10% on 1 January 2026. So what do we want here? We want the 100%. We know that this 88,000 is the 110. So we want the 100%, which is the amount before the increase. Okay, so now 100 divided by 110 multiplied by 88,000. We get our amount of 80,000. It means their salary before increase, it's 80,000. So from this 80,000, you are informed that they will receive a bonus of 60%. So what do we want? We want the 160 multiplied by 100. Then we get our amount, which is going to be 128,000. So now we have already received our amount. So here we're going to start by firstly saying 100 divided by 110, then multiplied by 88,000. Then we get our answer of 80,000 multiplied by 160 divided by 100. Then it gives us a total of 128,000. So a fixed deposit, including the quarterly interest, will mature on 31st January 2026. The interest rate is 8% per annum, receivable quarterly. Interest is not capitalized. So we have the interest on fixed deposit, which is 5,440, which is 8%. Now what do we want? We want the full amount, which is 100%, divided by what do we have, which is the 8% of the interest. Okay, Let me start with advertising before, because we have advertising here. So advertising is budgeted at the fixed percentage of the monthly sales. Okay. So if you can check our advertising here, it was 182,700. So to get the percentage, you are going to say 182,700 divided by 2,030,000. Then multiplied by 100 divided by 1. Okay. So now if we calculate this, we get the percentage of 9%. So here it means we want the 9% of our sales. So our sales, it's 1,995,000. So here we are going to say 1,995,000, then multiplied by 9% divided by 100, because we want the 9%. So we get our amount, which is going to be 179,550. Then now we are required to calculate the cash purchases of trading stock. Now let's go to the information that affects the cash purchases of trading stock. So the markup is 60% on cost. So we have the markup of 60% on cost, and stock is replaced in the month of sale. So it means when we sell, we replace the stock. A fixed base stock level is maintained. 20% of stock is bought for cash. Okay. So now the first thing that you are going to do, you are going to check our sales for January, which is 2,030,000, because you want the cash purchases. So you're going to say 2,030,000. From this one, what do we want? We want the cost price. So we want the 100% divided by our selling price of 160%. Then we get our cost price of 1,268,750. From this amount, we are being told that 20% of the stock is bought for cash. So what do we want? We want the 20 divided by 100. So here we get the total of 253,750. Then here we have the payment to creditors in January. Okay. So if we are paying our creditors in January, they are saying creditors are paid in full in the second month. So November, we have December, January. It means we are going to focus on our total sales of November. So here we are going to say November, we have total sales of 1,925,000. So what do we want? We want the cost of sales. We're going to say 100 divided by 160. Then we get our payments to creditors, which is 1,203,125. So here we have 1,203,125. Then now here we are required to calculate the amount of the fixed deposit which will mature on 31st January 2026. So let's go to the information that affects the fixed deposit. So here we have the interest of 8%. Now what do we want? We want the original amount, which is 100%, divided by what do we have, which is the interest of 8%. So since this interest is for quarterly, we want the 12 months divided by 3. Then multiplied by the amount that you already have as our interest. Okay. So now let's go to our information and check how much is our interest. So here our interest is 5,440. So we're going to say multiplied by 5,440. So 100 divided by 8 times 12 divided by 3 times 5,440, we get a total of 272,000. Then explain why it is important to compare the budgeted figures with the actual figures. So the first thing, we compare to improve future forecast. So that is the first reason. The second reason, we can say for effective cash and profit control. For effective cash and profit control. Then our last one, we can say to determine the effectiveness of the current controls. Because remember, businesses have their internal controls in places. So you want to check, are they working or what? That's why we are saying to determine the effectiveness of current controls. So now we can move. So 4.2.2, we have loss of sales. The number of units sold in October has decreased. Give a reason with figures for this decrease. Okay. So now let's check how did the sales decrease. So here, let's check our sales. So the number of units sold decreased to 61. So what can we say here? The first reason that you can say, guys, is that it's increase in competition. Maybe competition increased. The second thing that you can say, it's economic downturns. Maybe people have less disposable income to spend. So economic downturns. The third one, we can say it's changes or changing consumer behavior. So here, changing consumer behavior. So here we can check that the unit sold decreased from 124 to 61. So here we can say decrease from 124 to 61. Then to get the amount, we can say 124 times 1690 times 2480, so that we get the figures that you are going to code. So now provide a calculation to show the amount of cash that was lost in October 2025 when compared to September 2025. So let's go to October 2025 and September 2025. So we sold 90 units. Here we sold 90 units for 1,600. We also sold, we sold 124 units for 1,600. Here 61 units for 2,480. So we're going to say 2,480 multiplied by 61 units. Then we get a total of 151,280. Then we go to another one. Here we are going to say 1,600 multiplied by 124 units. So 1,600 times 124. Then we get a total of 198,400. So we check the difference between the two. 198,400 minus 151,280. Then we get a loss of 47,120. So now let's move to our next question. So here state two benefits that Warm Buyout traders will forfeit by failing to meet its financial obligations with suppliers in October 2025. So first thing is that they won't be able to get a discount for early payment. So we can say they won't be able to get a discount for early payment. Then the second advantage is that they are going to lose or benefit. They're going to be charged interest on overdue accounts. So we will say they will be charged interest on overdue accounts. If they don't pay on time, it means their creditors should charge them interest. So we have they will be charged interest on overdue accounts. Then 4.2.4, we have remuneration to employees. Give one reason for DOSA awarding his employees with commission during September 2025. So if you can check September 2025, they budgeted nothing for the commission, but on actual they received 3,900. So why did they receive the commission? So the first thing that you are going to check here, we are going to check the number of units sold. Okay, the number of units sold were budgeted to be 90, but on actual they were 124. So that's the first thing that you are going to quote. So here we are going to say number of units sold were budgeted to be 90, but on actual it is 124. On actual it's 124. Then the second thing that you can quote here, we can quote our sales. How are we going to get our sales? We are going to say the units sold multiplied by the selling price. Then we get our amount. So if we use those calculations, we can say that our sales were budgeted to be 144,000. So sales were budgeted to be 144,000. But on actual, our sales became 198,400. We have 198,400 here. So give one reason why the employees will not be satisfied with their revised remuneration policy. Okay. So the first thing, let's check their salaries. Their salaries decreased from 38,400 to 27,000. So they can't be happy if their salaries decreased. So here we can say salaries decreased it decreased from 38,400 to 27,000. We can also use it as a percentage. We can say salaries decreased by 11,400. So how did you get the 11,400? We say 38,400. So to get the 11,400, we say 38,400 minus 27,000, then we get 11,400. We can also calculate it as a percentage, which is 29.68%. We are going to say 11,400 divided by 38,400 times 100. Then we get the 29.68%. So guys, this is the end of our video. Hope you guys enjoyed the video. Thank you.